Good evening, everyone. I'm Jerry D'Ambrosio, Manager of Educational Content with VectorVest. I want to welcome you all to this week's special presentation. Moving averages are the basis for a number of technical indicators, such as MACD and Stochastics. Trading techniques centering around moving averages offer up a really simple and reliable way to identify true price direction. First, just a key concept or two about the importance of moving averages as a technical tool. Moving averages provide a simple means of smoothing price action, making the trend and momentum more discernible. This is something that's rather difficult with the naked eye. Moving averages smooth out the noise and help us identify emerging trend, strong trend, and then dissipating trend as well. Traders with a short-term perspective tend to prefer exponential moving averages, or EMAs, because they move closer to price, so there's less lag. Swing traders who are looking to hold a position maybe a few days, maybe a few weeks, will use moving averages that make sense. A 20-day moving average at the most, maybe a 30-day moving average at the most. Anything above that, now you're getting into more position trading, longer-term investing. 50-day moving average, 150, those are the moving averages that investors use. They want to stay in the position a lot longer than traders. So it's important, since we're only going to be in the trade a couple of days, maybe a few weeks, to use moving averages that hug price a little bit more closely, are more reactive to price action rather than just a simple moving average. And you can see the difference here on these charts. We're looking at an 8-day EMA in red, 8-day simple moving average in blue, and you can see that the EMA hugs price a little bit more closely and is a little bit more reactive, especially during turns. Here's the difference between a 20-day EMA and a 20-day moving average, simple moving average. The green line is that 20-day EMA, which again hugs price a little bit more closely, giving you earlier signals of trend changes. 4 key ways to use moving averages. Number 1, define and invest with the trend, whether it's up or down, and determine how strong the trend is. The steeper the slope of the moving average, the stronger the trend. And that's when you're using one moving average. If you're using 2 or more moving averages, it's not only the slope, but it's the separation that's being created by those 2 moving averages. The more the moving averages separate and fan away from each other, the stronger the trend. We can identify buy and sell signals, know when is the safest time to buy and when to consider selling. Crossovers help us with that, using 2 or more moving averages in a trading technique, in a trading system. The crossover signals will identify buy and sell signals. Short-term moving average crossing above a longer-term moving average, that's the buy signal. Short-term moving average crossing below the longer-term moving average, that's a sell signal. And that goes for all different types of crossovers, a 50 and a 150, a 3 and an 8. Those crossovers are signals with those moving averages. Is a stock near support or resistance? See if your stock is finding support at a moving average. Maybe it's a 20-day EMA, and over the last 6 months to a year, that 20-day EMA has served as nice support. Price has pulled back towards it multiple times, but eventually retraced, staying above it, retracing away from it time and time again, displaying a nice, strong trend. And then, is price extended? Determine if price is overextended and far away from its mean average. So moving averages are just that, they're averages. So going back to basic statistics, the further away something is from its average, the more likely it's going to revert back to it. Sometimes it's imminently, just depending on how far away and how overextended price is from that moving average. So expect that. Gives you a nice warning signal to help protect gains a little bit when you see that, because again, more likely it's going to come back towards that moving average. So this is the trading technique that I want to teach you folks tonight. It's called the 5-8-13 EMA squeeze swing trading strategy. So if you folks listened in on the Financial Freedom Summit that we had last month, you heard Stan Heller give this presentation. It's a fantastic presentation. Maybe some of you did see that presentation. If you weren't able to attend the Financial Freedom Summit, I wanted to give you a little taste of what he taught in that presentation. So the 5, 8, and the 13 EMA squeeze swing trading strategy is as follows. The exponential moving average is preferred here because it follows the price trend more closely, so there's less lag. It is a swing trading system. and we're using rather short-term moving averages, a 5-day, an 8-day, and a 13-day EMA. Using the slope of the three moving averages after a squeeze, and I'll explain what we mean by squeeze, we can confirm if a trend change is taking place and likely or not to continue. After a pullback or quiet period, the three moving averages, the 5, the 8, and the 13 EMAs, start to rise, squeezing together before pulling apart in an uptrending slope. We're going to look at a few charts here in a moment, so you'll get an idea of what this looks like. And VectorVest relative timing indicator, we need that rising and hitting higher lows to reduce the possibility of a false signal. And we use the 50-day moving average also to confirm price is above an institutional buying level. A lot of institutions use the 50-day moving average to take on positions. So the buy signal is generated early in the development of a trend. A sell signal early when the trend is dissipating. When the RT is falling, the EMAs squeeze together and then separate as they start falling. So that's an indication of a weakening trend. We're trying to get in at the very early stages and stay in as long as that trend continues. Once the trend starts to break down, and we're using moving averages to tell us when the trend is breaking down, we will look to exit the position. An early sell warning occurs when the trend is dissipating, evidenced by the fast and medium EMAs, that's the 5 and the 8, rolling over and squeezing together. When the fast or the 5-day EMA crosses below both the medium and the slow, the 8 and the 13, we're going to look to exit the trade. But I did mention that there are earlier indications that you can take profits sooner. The 5 crossing below both the 8 and the 13 is your last line in the sand. A dissipating RT, moving averages that are curling over. If you have a nice gain, that's an early warning signal to take action. Maybe you take half off and let the rest run. If you just wanted to close the whole position, take the gain, you can do that. So the buy rules are, we're going to look for a DEW up market. Anytime that the DEW signal is up, we can buy. We're also looking for price to be above the 50-day moving average. Now, it could first or just recently have crossed above the 50-day or resides above the 50-day when the other rules are in place. We look for the 5-day EMA greater than the 8 greater than the 13. And we need RT to be trending higher as well. And again, we're going to look at some charts here in a moment. The sell rules are 5 closes below the 8-day and the 13-day EMA. But I can't emphasize enough how important that RT indicator is. When we look at the charts, it helps us better understand whether the trend is strengthening or weakening. So again, here are the buy rules, and I just added a couple charts. We're going to look at charts within the VectorVest program in a moment, but here you can see the squeeze. So moving averages are sloping downward below the 50-day moving average, and then the stock starts to recover. You see those moving averages squeeze together. Then as the trend continues and the reversal continues, you start to see those moving averages separate. The bands start to pull apart. They start to slope upward. That fanning action is really your trigger. Well, in fact, the trigger is when the price crosses above the 50-day moving average. We need that to happen. Remember, price crosses above the 50-day moving average. The fanning of the 3 shorter-term moving averages, the 5, the 8, and the 13. And also, very important here, that RT is rising, hitting a new high, trending higher, confirming that this trend is strengthening and has some legs to it. And the sell rule is, and this is again prudent, there are earlier indications, like I mentioned, to exit a position, but we're going to focus on the prudent sell criteria here, which is when the 5-day EMA closes below both the 8-day EMA and the 13-day EMA. Remember, closes, not just dips below it during the day. It has to close below the 13 and the 8. So here's what it looks like. Tail end of the uptrend. 5 is above the 8. The 8's above the 13. The warning signal here are the gap in the bands widening. The 5-day EMA is extended from the 50-day EMA. We talked about how when price pulls further and further away from a moving average, and the moving averages really are creating quite a bit of separation, you can almost expect a retracement back, a reversion back to one of those moving averages, which again is an early warning sign maybe to take profits. You can also see a little divergence here between price and RT, another early warning sign. Another warning sign, if you didn't take profits right off of the top, right as price pulled back towards one of those moving averages, You stayed in, and that's fine. 5 squeezes towards the 8, another early warning sign, and then you sell at the latest when the 5-day EMA crosses below both the 8 and the 13-day EMA. And you can also see during that period, RT continues to hit lower highs as well. Okay, so let's take a look at some charts. Here we're looking at Nvidia, just back to March of 2020. The green line is the 50-day moving average. The yellow line is the 5-day EMA. The red line is then 8-day EMA, and the blue line is the 13-day EMA. And we're using a 50-day simple moving average as opposed to an EMA is because once you really enter into the identification of a medium term or intermediate term moving average like a 50 or a 100, you can use a simple moving averages. EMAs aren't necessary. So here back at the beginning of March, we see moving averages sloping downward below the 50-day moving average, creating separation to the downside, the 5 below the 8, the 8 below the 13. So you're in a downtrend, and then price starts to stabilize, and you can see the turning of the moving averages. They start to squeeze together. The squeeze is important to recognize. Also, you have RT trending higher as well. And I didn't want to create slides with all this. I wanted to get into the charts and manipulate the graphs. I think it's important for you, especially a lot of you traders, to know how to work a graph. So I've zoomed in here to this area, and I'm going to create my date line, right? As of the hard right edge, it's March 26, 2020, and I'm starting to see the separation. I'm going to click on this arrow that points to the right down here and move us forward day by day. I'm not really seeing the separation here. There. I'm starting to see that separation, the fan opening of those 3 moving averages. I also have RT trending higher as well. Now, one of the things we need to happen, I'm going to put price on. We don't need price up until this point. What I want to make sure is if price is above that 50-day moving average when I see that fanning action occur. So we have ourselves a signal here. Price is crossed above the 50, the 5's above the 8, the 8's above the 13. They've squeezed together, and now they're starting to fan apart, and the RT indicator is confirming that upward price trend. Our entry is above the close of that trigger candle. So we wait for the price to close above the 50-day. We see that it closed at 265.59 on that day. We wait for price to follow through the next day, going above 265.59. And that happened the following day. Now, it didn't close above that level, but it went above that level during the day. So that was an initiation of that trade because you did get follow through the next day. So now that we're in, I'm going to take off price. Remember when we exit? We exit when the 5-day EMA crosses below both the 8 and the 13. So I'm going to move forward day by day. Oh, we got a little bit of a pullback there. The 5's converging towards the 8 and the 13, but now we're getting that separation again, and we're staying in the trade. We didn't get a signal. Now, we got an early warning sign. The 5 never crossed below the 8. It did converge towards it, but you never really got a signal to exit the trade because the 5, again, didn't cross either the 8 or the 13, and now we're off and running. So if we get in at, again, 265.70 maybe, that could be our entry, a little bit above the close. We're going to stay in this trade as long as, oh, we're seeing a little bit of a dip now, right? So the 5-day EMA converging towards the 8-day EMA hasn't crossed below yet. So we're using these moving averages. You can see RT is continuing to trend higher. We're using these moving averages to help us stay in the trade. A little conversion there. And now we're starting to see a little bit of a downslope. They're starting to converge together. You can see the values here. So the 5 is currently above the 8, the 8's still above the 13. Not quite seeing the crossover yet. Moving averages are really starting to squeeze tighter and tighter, but we're still not getting our signal to exit. The 5 has not closed below both the 8 and the 13. It's a fantastic system. It's keeping you in this trend the entire time, and it looks like we're in September now. There's our signal to exit. September 10, 2020. 5 closed below the 8 and also below the 13. There's our signal to exit. $492. Remember where we got in the 200s, 260 and change there. Let's look at Etsy. We're looking at Etsy back at the same time period, March, April 2020. There's the same similar pattern. Moving averages are sloping downward. Create a base. The downtrend is dissipating. The moving averages squeeze together. The RT is trending higher, so now we're going to move forward day by day, and now we're starting to see that fanning action. We got to make sure that price is above or closes above the 50-day moving average. So there's another entry here. So price closed at $51 even on that day. Following day, confirmed and went higher than that day's close. So you're in the trade. Let's continue to move forward. Just going to use my right arrow here. We had a little close of the gap there between the 5 and the 8, but no true crossover. Looks like we're almost about to get the signal here, and I think right here on May 26th, we had the 5 crossing below the 8 and the 13. So that's our sell signal at about $74 and change. Now, price is still above. I'll put price on. You could see it. Price closed below both of those moving averages, but again, the 5 closed below both the 8 and the 13. We exit near the close of that day when we see that happening. I'm going to take off price. Let's see if we can get another entry here. So it looks like we got the squeeze. Price is still above the 50. So when it first crosses above the 50, like it did in April, that's your first entry, your first possible entry. If you exit a trade because you get a sell signal, maybe price continues to fall, but stays above the 50-day moving average. If you see a reversal and that squeeze of those 3 moving averages, and then the separation. Now, here's what I'm seeing. A slight separation between the 3 moving averages, but RT is not trending higher. It's actually trending lower. So I'm not looking to take a trade even with the moving averages sloping upward with the RT trending lower. I'm going to look at that RT. It's starting to trend a little higher, and now I'm starting to see that separation between those 3 moving averages again. So now is a good opportunity. After this dry period here, or quiet period, we're able to get back in. We know price is still above the 50-day moving average. So the close of that day was 84.55. So price goes above the close of that day. This was June 16th. The following day, we're able to take the trade. So we stayed out of this quiet period, a new trend emerged, a new leg to the uptrend began, and we're getting in at really the very beginning. And as I keep going here, we're staying in the trade. We got it in right at the beginning, and now looks like we'll exit. 5 crosses below both the 8 and the 13. Want to make sure that that's exactly the day. Nope, it was actually here, July 16th at about $103. So we exit when the 5-day closes below both the 8 and the 13. If we continue to move forward, we might be looking for another entry, and here we have another quiet period. We took our gains, reinvested those gains into the next trade. Moving averages are starting to fan apart. Notice I don't have price on because price really doesn't matter here. We just need to know where price closes on the day that we see the separation between the 8, the 5, and the 13. Make sure, if those moving averages are above the 50, we know price is above the 50. And then RT trending higher as well. So now I'll put on price. We had a big day. Nice volume on that day as well. So 118.38 was the close. We enter anywhere above that. Clearly, we got confirmation on that following day. So we're in right at the beginning stages of this trend. We could see the 5 starting to converge towards the 8. No crossover yet. Looks like we got our crossover on August 27th, about $122. And we'll look at one more. We'll look at Apple. Same time period, just kind of going through the technique, making sure you folks understand the setup, the entry, the exit, all very important components of a systematic trading system. So here, as of the hard right edge, I'll give myself a date line here. We're starting to see RT trending higher, but the moving averages aren't quite fanning away from each other like they begin to do here. April 12th, April 13th. We got to make sure, see, price isn't above the 50-day moving average yet, so we have to wait. We see the fanning taking place, the RT trending higher, but we have to wait for price to cross above that 50-day moving average. We take the trade the following day on confirmation. We didn't get confirmation the following day, so we're going to continue to wait until we do. We still have the setup here. The 5 never crossed below. There's your entry. The fanning, which I didn't quite see here or here. I know price is above the 50-day moving average, but we're not quite seeing that separation yet like we begin to see on April 30th. So there is your entry. You had to wait for the trend to really pick up steam, and it kind of broke down a little bit right as price crossed above the 50 here. We want to be better than that and not just enter in the next day. We want to wait to make sure that the trend continues. So if I move forward here, RT is picking up, the trend is strengthening, little bit of a convergence there with the shorter term moving average. And here is where we get our sell signal. $92.62. 5-day moving average has closed below both the 8 and the 13, giving us our sell signal. So let's just kind of step forward. Let's see, price is falling. We got whipsawed a little bit. We got out because our signal told us to get out. We don't know what's going to happen to price after we exit, but it gave us a quick signal to get back in. The trend really didn't pick up steam to the downside. It reversed rather quickly, and if you'd like to take the trade again, you very well could above 106.26. That was the day that not only is price above the 50-day moving average, but the moving averages are separating, right, creating that fanning action, and RT is trending higher as well. So if we keep going, we got back in at a really good time, didn't waste any time, and now we get our signal here right around $112.82. You saw the squeeze of those 3 moving averages, and eventually the 5 closed below the 8 and the 13. So I want to thank you folks for joining me here today. Hope you learned something. What I'm going to do next is talk about a brand new course that myself and Mr. Stan Heller will be teaching in a few weeks. It's called Mastering Moving Averages. It's a new course. It'll start November 23rd. The regular price for this course is $595. You can register for the early bird rate. It's only $395. You can go to VectorVest.com/MA or give our support department a call to register. Here are some things that you will be taught in this new course: the VectorVest system, the principles, tools, and market timing, understanding moving averages, trading with a single moving average, trading what's known as golden crosses, moving averages as support and resistance. You'll learn more about the EMA squeeze swing trading system that I just taught you here. There is a bearish approach to it as well. Multiple moving average trading systems. We have a special guest, Dr. Barbara Starr. She's going to come in and teach you about surfing the reversal waves. You'll learn about the Midas Touch moving average trading system and a bonus trading system using high-low moving average bands. Some additional bonuses: you will have access to VectorVest Intraday for the duration of the course if you don't already have it, and you'll be given case studies and 6 mastery support classes as well. This is both for the US and the Canadian markets. Stan Heller will be presenting in VectorVest Canada, and I'll be showing you guys examples, case studies in the VectorVest US program. So this is a tag team event, Canadians and US residents all in the same mastery class. Thank you folks for joining me here today. Again, I hope you learned something, and Stan and I look forward to this course for sure. If you have any questions, give our support department a call, or you can email support@vectorvest.com. Have a great evening, everybody.